Well, thanks very much. I've got three things I want to get out of the way first. A few thank yous. Thanks to Mike for that intro, and now I've got to live up to it. My second thank you is to Rob and Gina and their team that have organized this and done a fantastic job. I think it deserves a round of applause. So, great job with that. And what was that third thing? I'm going to give some books away at the end, so you got to pay attention. There are some clues in the presentation, so if you pay attention, you have a better chance of winning. All right, so my talk today is going to be, one other thing. This being a silver symposium, I'm actually going to talk about silver. All right, so let's get started. My talk is the silver roadmap, and I'm going to go through a few things. I think that I really do think we're going to see, as history has shown us a few times, we're going to get a massive move in silver. It's going to take some time to play out, but it has before. I certainly think we're building up, and it's likely to be a multiple of what we've seen in the past. So in this talk, I'm going to really cover four areas generally: macro, the short and medium term outlooks. I'm going to look at a way that I've come up with, a simplistic way to understand the silver market. Still a good way to kind of remember how it works. Some things that drive the silver market, and ultimately what opportunities I see going forward. Looking at macro, in the last couple of years, we've probably heard about inflation more than we have in the last 15 or 20 years. The Fed finally seems to have gotten what it wanted so badly until about 2019, 2020. So on the left side, what we have here is what's called the CPI, so the Consumer Price Index. And that's what we get in the headlines, in the news regularly, in the mainstream media. And so that spiked as expected, not transitory like the Fed told us it would be. Spiked to 9% in 2022, June or so of last year, dropped off considerably, made its way all the way down to 3%. And then the last few months, it started to rise again. So it bottomed at 3 in June, 3.2 in July, 3.7 in August. Definitely not going in the direction that the Fed would like. And now near 4%. On the right side, you have the Personal Consumption Expenditure Index, which is what the Fed says is its favored measure of inflation. Well, that did not spike to 9. But it made its way above 5, and it's been very, very sticky. It has not even fallen back below 4 so far. So right now, drop down near 4 has started to rise again, and again, not going in the direction the Fed would like. So if you look at these two, pick one, they're both right around 4%, which is double the Fed's target of 2%. Again, really making things challenging for them. And so I do believe that at least until something breaks, we're going to probably see at least another rate hike or two. Andy Schectman talked about this a little bit earlier in terms of what the Fed has been doing and what the system's been doing and what it's done to the banking system. Well, if you look back in 2008, 2009, it took 165 banks to reach about $530 billion of losses. It took a year and 165 banks. This time around, earlier this year, it took a couple of months and 4 banks to reach $550 billion. So talk about acceleration. I mean, some of that probably is explained by concentration, no doubt, but still, it really gives you some idea of how things have accelerated. Again, big picture, you look at what's happening in the markets with rates around 5%. People, of course, are risk adverse. They haven't seen these kinds of rates for probably something like 15 years. You've got a lot of boomers, retirees who are happy to finally get some decent return on their money. So you've got a new all-time record, $6 trillion in money markets. But what these high rates have also done is they've kicked up the Fed's own debt interest payments. They're now close to $1 trillion a year. Something also that's going to probably ultimately put some pressure, political pressure on the Fed, whether it wants to admit it or not. The US public debt reached a dubious milestone this year, $33 trillion. That's just sort of the official number. But here's an interesting stat. The Congressional Budget Office tells us that over the next 10 years, the US debt is going to grow by $5.2 billion every single day for the next decade. And that's going to bring us to over $50 trillion by 2033. I actually agree with most of this. The only thing I think they got wrong is the steepness of that last portion between 2023 and 2033. I think that's going to actually be a lot steeper, and we're going to get to 50 trillion much faster, unless something breaks or blows up well before that, which again wouldn't surprise me. Now, this is actually one of my favorite charts when you want to look at the macro picture and what silver has done. So the orange line here is the Fed funds rate, and the gray line is the silver price. The green dotted line is the point in time when the Fed started to increase rates very aggressively. In fact, almost the fastest rate hiking cycle in the last 100 years. What's impressed me is how, as the funds rate rose very dramatically, you see silver still relatively high, say around $28 has been the high, started to trend downwards as these Fed rate hikes started to accumulate pretty quickly. But then silver started to bottom and then rise again. And over that span of about the last year and a half, when we've had this dramatic rate hiking cycle, silver has actually held up pretty well. It's almost flat. So that's a tremendous headwind when you think about it for the silver price, and it has really held up quite well. So here's how I think it's more or less going to play out over the next 12 to 18 months. I think the Fed's going to hike a bit more against inflation. It has to save face. Obviously, it was not transitory. So maybe we get one hike, maybe two. Something's likely to break. Recession is certainly likely. That's likely to happen over the next few quarters. I think central banks are going to pause, probably in unison. We're going to start to see them cutting rates. That could happen probably well within a year. The real rate, in terms of the interest rate minus inflation, that right now that's positive, maybe about 2% or so officially. I think that gap's going to close. That's going to start to make precious metals interesting and attractive once again. That's going to bring investment demand back to silver. As we work our way through recession and we come out the other end, I think that we're going to start to see industrial demand start to pick up again for silver. That could be as much as a year and a half. We've got the investment demand that could lead the way up until we get there. And I think that potentially over the next 2 or 3 quarters, we could still see silver make its way back towards 26 and even move beyond that. So you may have heard of something called the dollar milkshake theory. That was put forth by a guy by the name Brent Johnson, who runs a fund management company called Santiago Capital. And the dollar milkshake theory, I'm not going to spend much time on it, but it was his idea of how to explain and understand the world's asset markets. So you've got all these different assets, they're all the different ingredients in the milkshake, and one of the dominating assets is, of course, the US dollar. And so it gets pretty detailed, but again, to keep it kind of simple and easier to understand, and what he was getting to is that ultimately, and not forever, but as things get rough, the US dollar, along with gold and silver, would actually probably do quite well, just because it's a last resort. But the straw, and so the way he explains this is that the straw in the milkshake really is the Fed funds rate. And as the Fed funds rate rises, it's like sucking the ingredients out of the milkshake, improves the value of the dollar. Of course, a higher rate makes it attractive. Others want to buy it for yield. But it also obviously makes life difficult for all of these other assets, especially, let's say, emerging markets or companies in emerging markets that issue debt in the US dollar. And so when they need to make their debt payments, they have to go out and buy dollars in the market. They're a lot more costly, and it just makes life very complicated. So that being said, I said, why don't I play off of that and find an easy way to understand the silver market? So I put together this much more simplistic idea of something called the silver latte theory. And so if you think about a latte, it's got milk, espresso, and ultimately at the top you've got some froth. Well, the milk is like the basic part of it. Help keep the silver price from dropping too low. Of course, you've got production costs that tend to be a floor, not a perfect floor, but they also help to provide a lot of support. Then you've got the espresso. That's the shot of coffee or caffeine. That is the investment demand side of silver. That's where you see these extended rallies in the silver price. So that's kind of the wild card that helps push silver up from time to time every few years, and you get these very big bull runs. And finally, the froth on top is the FOMO, the fear of missing out, and that's when you get these big spikes in the silver price. And earlier today, you had Jeff Clark talking about how you have his boring boom, and that would explain the FOMO side of it, when you get these huge spikes. So hopefully that's just an easier way for you to kind of remember how the silver market is built, how it works, and how it behaves. So what's likely to be driving the silver market over the next few years and decades? Well, solar is a really big one. A couple of other speakers have talked about that, and I have obviously some other things to bring to it. But looking back 2013, that's just 10 years ago, the solar market, so the investment in solar was 1/6 what it was in the oil industry. If you look fast forward to this year, solar has already equaled the amount of money that goes into the oil industry. I think we're going to continue to see those two bars inverse, and solar will continue to grow. Of course, a lot of this is government mandated government pressure to help keep supporting the green transition. Nonetheless, one of those things that if you can't fight them, join them. Solar takes a lot of silver, and so this is going to be very bullish for the silver industry going forward. The International Energy Agency figures that by 2027, solar is going to be the top source of power worldwide. Now, it's a little bit difficult to see in this chart, but let's see if this works. It doesn't seem to work. In any case, you may be able to see it in that black circle. You've got the yellow line that trends up, and by 2027 actually crosses above natural gas and coal for solar to become the world's top source of electricity. So let's dig in a little bit deeper. Manufacturing capacity for solar panels worldwide. Tremendous growth in just the last few years. In 2021, we saw 55% growth globally. 2022, again, 55% growth globally. The forecast for this year is 28% growth in manufacturing capacity. Already by mid-year, I think by July, we were at 18.5%. So this 28% is likely to easily be taken out, probably somewhere going to be closer to 35% or so. And, I'm going to go back for a sec. The red portions of those bars are Chinese capacity. So like many things, manufacturing-wise, China is actually 80% of the global manufacturing capacity for solar panels. They really dominate this market. That may start to change a little bit. So the oxymoron of the US Inflation Reduction Act is going to have a big impact. This is an interesting statement by Rystad Energy that does a lot of research on the entire energy complex, different types of energy worldwide. And they said they think that the Inflation Reduction Act is going to put so much pressure on the US put the US on track to become one of the most cost-effective locations globally for harnessing utility-scale renewable energy. And so that's thanks to things like investment tax credits, production tax credits. That's going to help reduce expenses for these renewable energy projects that obviously are built on a very large scale. And so here's a forecast by CPS, which says that in part, certainly thanks to the Inflation Reduction Act, that manufacturing capacity in the US for solar panels is actually going to grow much more quickly than in the rest of the world. Over the next 5 years, at an average of about 48%. So a lot of that's going to happen here. Now, these two charts are really useful to understand what's been happening in solar. If you go back all the way on the left chart, 2013, 51 million ounces of silver went to the solar industry. By 2021, it was already 110 million ounces. Last year, it was 140 million ounces. The Silver Institute forecasts that this year it's going to reach 160 million ounces, and likely next month, they're going to revise that forecast. My personal forecast is it's probably going to be closer to about 180 million ounces. And so it's just been a dramatic growth in how much silver ends up going into the solar industry. And here you have that orange dotted line across on the left side. And that's what we call silver loadings. So that's the amount of silver that goes into each and every panel. So you're going to say, Peter, what's going on here? This line is going downwards. So that means less and less silver is required for each and every panel. And that's been the case. And yet, look at how much silver that the industry needs. Despite the amount of silver going to each panel, that's been more than made up for by the amount of solar panels being built. So I also think that the trend of this line is going to change, and that we're at an inflection point now where we're going to see that happen perhaps this year, perhaps next year. The chart on the right is the reason why. So that dark blue bar on the left is the main technology for solar panels right now. It's called PERC. The middle one is TOPCon, and the right one is something called HJT. So these are the new technologies in solar panels, and they're not some pie in the sky thing. These are things already in production. They already exist, and as I'm going to show you in the next few charts, they're starting to take on a new life in terms of the types of panels that are being produced. But the interesting thing is that that's what that chart shows you, is that the two bars on the right, the TOPCon and the HJT, they require 50 to 150% more silver per solar panel. So why would they do that, except that it's for increased efficiency? So when you put more silver into these new technologies, you actually get more power out of it. So despite the increased cost to produce these solar panels and the increased amount of silver, it's worth it because you actually get more energy out of that panel. Again, Rystad, they do some great work. They expect that this year, 80% of all new cell manufacturing capacity for solar panels is going to be these two new technologies, the TOPCon and the HJT. In fact, in the email exchange with them, they said to me the only material that they have any worry about in solar panels is silver. They have no issues about getting the silicon, the glass, anything else that goes into the panels. And this gives you a better idea of that progress of these two newer technologies that require more silver. In 2020, HJT and TOPCon represented about 10% of all the manufacturing capacity. This year, it's already grown to 35%, and that's going to just keep growing. Now, we had talked before about the energy transition, and this refers to silver specifically within the energy transition. Right now, there's about 5 kilotons of silver that are required. So this is actually a study, a meta-analysis of about 11 studies done worldwide. And so we've looked at the median. And so if you look at across these different studies, they estimate that we're currently at about 5 kilotons of silver every year for the energy transition. Within a decade, that's going to double to 10 kilotons. And by 2040, that's going to triple to 15 kilotons. So this silver is just going to have to come from somewhere, or we're not going to meet these targets. So looking at this, stepping back a little bit, solar demand for silver is up 320% over the last 10 years. Investment demand for silver is up 100% in the last 5 years. And yet what's happened with mine supply? It's actually flat over the last decade. It's incredible to think that the two largest drivers for silver, specifically solar within industrial and an investment demand, have been soaring for the last 5 to 10 years, and yet mine supply has gone nowhere. Some interesting comments on research by ANZ, which is the Australia-New Zealand Bank. In a report, they said they figure that by 2025, so 2 years from now, the demand for silver from solar alone is going to be half of all industrial demand. And that's going to help, of course, put increasing pressure on the supply of silver. Growth in mine production is beholden, and I'm going to talk about this in probably the next slide, beholden to other metals, where silver is really a byproduct. And finally, they say that they estimate that the silver market is entering a period of tightness that has not been seen for decades, and that even higher silver prices is not going to help alleviate. So this is a really interesting statistic about silver and how it's produced and where it comes from out of the earth. Only 30% of silver comes from what's called primary silver mines. Actually, 70% of all of the silver that comes out of the ground every year is a byproduct of producing gold, copper, lead, or zinc. So think about that for a minute. If you're a miner and you produce one of these other metals, silver's a byproduct, doesn't represent that much of your revenue. The silver price starts to climb, starts to spike. First of all, it's already difficult to start ramping up a mine. Ask anybody who manages a mine. That's really tough as it is. And yet, if silver is starting to pay you a higher return for your sales, and it's hard to ramp up a mine, and it's not that representative of that much of your revenue, what are you going to do? You're just going to accept, and that's what they do. They simply accept a higher price for their silver and do nothing else. They're just glad to get more sales and higher revenues and higher profits on their silver sales. So really, that makes the silver supply very inelastic to increases or decreases in the silver price. This production comes out, rain or shine, and almost irregardless of what is happening with the silver price. So you have low supply, you have growing demand, and that's going to just help feed higher silver prices going forward. We look at mining capex. This is something you may have heard or may have seen, but this chart does not specifically include silver, but you can bet it's very much part of these other minerals and metals. But over the last decade and over the next decade going forward, the amount of spending on building mines, on investing in mines, looking for the metals and the minerals and getting them out of the ground has just been falling and falling and falling. And the forecast is that it's just going to keep falling. So we're really leading in towards a decade of scarcity. Mexico is the world's largest silver producer, 170 million ounces a year. It's just incredible. They're miles ahead of their competitors. The next two are China and Peru. They're miles ahead of China and Peru. Well, look what's been happening in Mexico. They've just had their worst silver output quarter in the last 4 years, down 19%. A big part of that is Newmont. They've got a mine called Penasquito, which has been on strike for the last few months. No end in sight right now. That mine is 32 million ounces. It's the world's largest silver mine. It's a byproduct. It's not a pure silver mine, but it's still 32 million ounces from that mine alone each and every single year. Others have talked about this a little earlier as well, but certainly just a little interesting anecdote. This is the Sprott physically backed silver ETF called PSLV. 5 years ago, 8% of this ETF was owned by institutional investors. Today, 18% of it is owned by institutional investors. So my view is that when they want to buy silver, it's much easier than having to buy physical and storing it. They go to something like this. Sometimes it may be a short-term move, but it's certainly the ETF of choice for the ones that understand them well. They're not all created equal. That is sure. Some really interesting research done by a group called Oxford Economics last year. What they did was they looked at the last 23 years or so, from 1999 to 2022, and they said, how much silver would make sense to have in a portfolio? Will it help your returns? Will it lower your risk? And it turns out it does. So if you look at a medium risk portfolio, you include all asset classes generally, bonds, stocks, precious metals, all sorts of things. And what they determined was, over a span of 23 years, it made sense to have almost 5% in a medium risk portfolio. So you're actually lowering your risk, the volatility in your portfolio, and you were maximizing your returns by having 5%. So then Oxford said, well, let's look ahead. They have their own ways of forecasting, their own expectations going forward, and they said, based on our forecasts, what would make sense over the next 10 years? And they said, well, given their outlook, given silver's undervalued status versus gold right now, we know that the ratio is very high, and their expectations for interest rates and everything else, it turns out for over the next 10 years, they actually forecast that a higher allocation to silver is would make sense in the portfolio at about 6%. If you look at, I don't have this here, I have limited time, but Oxford also showed us that it's something like 0.2 or 0.3% silver in the average portfolio, and it's indirect exposure to silver. So if you needed to get investors even up to about 2% exposure to silver, they need to multiply their exposure by about 10 times current exposure. It's just off the charts when you think what it would take to just get something anywhere close to the optimal allocation to silver in a portfolio. So now, why silver? Silver is a really small market. Compared to gold, it's about a 20th of the gold mining industry. The S&P energy sector, the entire mining sector, and then Apple, for example. Silver barely even shows up on this chart. And so the advantage of that as a retail investor is that you can be a lot more nimble. It takes a lot less money shifting in and out of this industry and this sector to make this move. And that explains, as Jeff was saying earlier, you get this boring boom and you get these huge spikes in silver. But it's by being invested and being patient that you get to take advantage of them. Silver outperforms gold in bull markets. We've seen this time and time again. It tends to lag, and then in the later portions of the bull market, it tends to catch up and then even dramatically outperform. I put this chart together to show the 1980 peak. That's what we have all the way on the left. Obviously, gold did well. On a percentage basis, silver dramatically outperformed gold. We saw this happen again in 2011 when silver peaked. And then here's where we are currently. Silver has done relatively well. Gold obviously has done better. And so we've got this huge gap still where silver has a lot of catching up to do versus gold. Here's some interesting perspective. You look at the 1970s, silver outperformed stocks, but it also outperformed gold. So that blue line at the bottom is the S&P, actually flat over an entire decade without taking account inflation. So we know inflation hurts stocks. It makes for rising rates, higher operating costs for companies. In that same 10-year period, gold was up 1,400%. Silver was up 3,700% in the 1970s. Of course, it was not a straight line. In the first portion of the 70s, up until about 74, was up 340%, went through about a year and a half of downwards to sideways trending, and then up 1,100% in that last 4 to 5 years. In the 2000s, silver was up 1,100%. Again, not a straight line. You usually have these mid-bull corrections, sideways. Jim Rogers has said that it's typical to get a 50% drawdown in a true bull market. That certainly played out almost exactly that way in the 2000s, but it gives you some idea of the potential of silver's returns. A couple of examples of what stocks can do, silver stocks. Pan American Silver is one of the largest market cap silver companies. It has one of the largest silver reserves in the world. Between 2001 and 2008, Pan American Silver, one of the lowest risk ways to play the silver space in stocks, for example, was up almost 16 times. Wheaton Precious Metals, probably the lowest risk way to play silver equities, was actually up 17 times. This company doesn't even mine silver. They're about 45% revenue silver, and they have royalties, they have streams. They don't even get involved with exploration, mining, permitting, any of that risk, and yet their stock in a matter of 3 years was up 17 times. But the real spike and the real juice is in the junior silver stocks. Here's one example. In 2016, between January and August, so that was about a 7-month range or so, silver was up 40%, quite a nice return in 7 months. And here I didn't even pick and choose. I just took the SILJ ETF, which is a group of, in fact, even larger cap smaller silver stocks. And this ETF was up 320%. It leveraged the price of silver 8 times, and this is an across-the-board measure of junior silver stocks. So you It was not all healthy. A lot of companies, these CEOs overpaid for. Nonetheless, it happened, and yet this time around we have this gap. We've seen the gold price rise considerably from about 2017, 2018, $1,200. We're up around $1,800, $1,900, and yet there's been almost no M&A activity. And when that starts to happen, the industry starts to get excited. You start to see a lot of companies get taken over, mergers and so on start to happen, and it really gets things rolling. So if you're going to participate in this, you really have to have a game plan. Of course, it's no secret silver, gold, silver and silver equities have been massively oversold, especially in the last sort of year or so. But now's the time to do your research. Take advantage of this lull, of this low. Scale into new positions. Look for things like top-tier management and make sure the company is well cashed up. You want projects that have scale, that have grade. There's no point taking risks if there's not considerably big potential. You want favorable jurisdiction. You want favorable infrastructure. All of these things, you can find all of this information. And of course, finally, if you do start buying into some of these companies, do it gradually. It doesn't have to be an all or nothing kind of thing. If you have $1,000 or a few $1,000s to put into a company, you can do it watch it. Put a few dollars in, watch it. That's the best way to keep track of what's going on and to stay on top of it. The moment you have a few dollars invested, you will actually, trust me, you will keep track very closely, even if it's a small amount. And you can just layer in gradually over a span of a few weeks, of a few months. Take advantage if you see the price go down. If you see it to start to climb back, you can start putting a little bit more money even into that equity. So a little bit about what I do. I write the Silver Stock Investor newsletter. It's the only silver-focused investment newsletter around. I talk about everything from the junior explorers all the way up to the larger producers. I talk about the ETFs in the space, things like royalty and streaming companies, and from time to time about physical silver as well. And it's really my views on the macroeconomic landscape. I do a lot of research on silver. I talk about a different topic in the silver space each month. It's a twice monthly newsletter. Each 2 weeks I do a technical review of the silver charts of the dollar and so on, and silver stocks through the ETFs. I do an analysis, full analysis when I recommend a new stock, or I do reviews of existing stocks in the portfolio, deep dives as I call them. And then finally, as I say, it's bi-monthly updates, and I do updates on the entire portfolio. Any news from any of the companies, I give you a synopsis and my thoughts on that. So special for anyone who's taken the time to be here and made the effort and been patient and listened to me all this time. I'm offering a good discount on subscriptions to the newsletter. You've got that URL at the bottom, QR code as well. We're going to hand out some little cards with that QR code if you want. But if you need to get in touch with me, I'll get that to you. It's no problem. And something I'm working on launching, Silver Premium. It's going to be a new service. It's really exclusive access to private placements and financing deals. The thing that's attractive about financings and private placements are the warrants. The warrants are really a bonus. So when you participate in financings, sometimes you get something called a half warrant or a full warrant. A full warrant is a 1-for-1. You get one warrant for each share that you've purchased. And then what it does is it gives you the ability over the next, say, year or a couple of years to actually turn back the clock. That warrant allows you to turn back the clock if a share has gone from 10 cents to 20 cents, and those warrants allow you to buy them buy those shares for 15 cents, while they may be trading at 20 cents, you can exercise your warrants, actually buy shares at 15 cents, and lock in that profit immediately. So I'm on Twitter at Peter_Krauth. I'm on LinkedIn. And what I've done is there's a lot of information. There's a lot to know about silver alone as an investment sector. Last year, a couple of years ago, I decided I was going to synthesize all of this info, all of this research, put it all in one place. So I published a book called A Great Silver Bull. It's available on Amazon. It's in paperback, audio, and in Kindle. And that's basically it. I'm going to now finish off by giving away some books. I told you had to pay attention. I've got some questions for you, and if you're ready, I need to get these books. I'm looking for, someone's got to give me a hand here. Patrick or anybody nearby? No? Yeah. I don't know. They're over here. I'll take care of it. Never mind. Patrick's worked hard enough the last 3 days. Thank you. So if you think you know, which ancient civilization created the first silver coins?
Rome.
Wrong.
Oh. Egypt.
Wrong.
If I answer it right, I'm going to take the book I already have.
Okay.
Yes.
Who?
The Lydians?
Nope.
Greeks.
Aztecs.
Nope.
Babylon.
Nope. Yes. Who said? I did. All right. Yes, that's right.
I can't remember the name of it. Thank you, sir.
You bet.
Appreciate it.
All right. Which country produces? Yes.
Whoa, wow. You didn't even ask it.
What's that?
They already know that they already know the answers.
I know. That was an easier
who
one.
got it? Who'd you pick?
Right here.
Hey, thank you for the book.
You're very welcome. Okay, I've got to see some hands. Okay.
China.
Right there, the lady right there. These are.
I'll handle that. Yeah. You have the book?
Yep. Thank you. Silver's all-time high. Yes. 50.
All I want you to do is sign this.
Be a pleasure. Last. Hands. I got to hear it from him. Sorry?
Canada.
Yes.
Peter, bonus question for that book.
Yeah, sure. You're very welcome. You got to think before.
Mexico.
We did that one. Okay, so can you name the two countries that are number 2 silver producers? You have to get both. Yes. Who said that? All right. That's it for me. Thanks very much.